Okay, good morning. So our topic for today will revolve around the recording process. Will revolve around the recording process, in which we will try to answer the uh, problem or your activity before. So we will make the journal entries, and also we will make your ledgers until we can prepare your unadjusted trial balance. Okay, so wait, I'll just set up my screen. So let's answer the problem. So Pioneer Advertising Agency, chart of accounts. So your chart of accounts was already given. If your chart of accounts was already given, you use the account titles from the chart of accounts. So let's make the journal entries. So letter A. On October 1, CR Bird invests 10,000 cash in advertising company called Pioneer Advertising. So our entry here is a debit to cash and then a credit to owner's capital, amounting to 10,000 pesos. Letter B. On October 1, Pioneer purchases office equipment costing 5,000 by signing a 3-month 12% 5,000 note payable. So here we signed a note for the purchase of an equipment. So what will we debit? So debit equipment, credit notes payable, 5,000. Letter C. On October 2, Pioneer receives a 1,200 cash advance from Arnox, a client, for advertising services that are expected to be completed by December 31. So what will be our entry? So our entry will be a debit to your unearned service revenue if there is an account such as unearned service revenue. And then we debit to cash and a credit to unearned service revenue. Okay. So that's for our third entry, letter C. Okay. So for letter C, our entry is a debit to cash and a credit to unearned service revenue. So debit to cash, credit to unearned service revenue. So the amount is equal to 1,200. Letter D. On October 3, Pioneer pays office rent for October in cash. So what is this office rent? We call it your rent expense. So we debit rent expense and we will credit cash amounting to 900. Next, letter E. On October, Pioneer pays 600 for 1-year insurance policy that will expire next year on September 30. So our entry on letter E is a debit to prepaid insurance and a credit to cash amounting to 600 pesos. Okay. Letter F. On October 5, Pioneer purchases an estimated 3-month supply of advertising materials on account from Aero supply of 2,500. So this is a purchase of supplies on account. So our entry is a debit to supplies and a credit to accounts payable. And a credit to accounts payable. So the amount of our journal entry is equal to 2,500. Letter G. On October 9, Pioneer hires 4 employees to begin work on October 15. Each employee is to receive a weekly salary of 500 for a 5-day work week, payable every 2 weeks. First payment made on October 26. So your entry here is no entry. Why? Because there is no change as to our asset, liabilities, or equity. We did not pay yet any employee. We just hired them. So in letter G, no entry. That is not an accountable event. Letter H. On October 20, CR Beard withdraws 500 cash for personal use. So our entry is debit, owner's drawing, and a credit to cash amounting to 500 pesos. Letter I, on October 26, Pioneer owes employee salaries of 4,000 and pays them in cash. So our entry is debit, salaries and wages expense, and e-credit to cash amounting to 4,000 pesos. And last transaction, letter G. On October 31, Pioneer receives 10,000 in cash from Copra Company for advertising services provided in October. So our entry here is a debit to cash in a credit to service revenue amounting to 10,000 pesos. Okay, so those are the entries. After we make our entry, we will already post it to the ledger. So you have your ledger in which we will make a 3 money column ledger. Actually, in basic accounting, you can prepare 3 types of ledger. So first is, of course, your 3 money column. Second is your T account. Third is your transaction analysis. Okay, so guys, we will try to prepare our ledger using the 3 items so that you know how to prepare using a 3 money column, you know how to prepare using a T account, and you know how to prepare using your transaction analysis. Okay, so so that we can properly prepare, of course, we need to list down the different accounts that we use. So the accounts that we use are, first, we have your cash. Okay. Next, we have your supplies. And then we also have your prepaid insurance. We also have your equipment. Also, we have your notes payable. And then we have your accounts payable. We have your unearned service revenue. And then owner's capital. Owner's drawing. We have your service revenue. And then we have your salaries and wages expense. And then our last expense is your rent expense. Okay, so we will make our 3 money column ledger. So the first part is, of course, your date. Okay, so this will form part of your date. And then we have here your transaction. We have here your reference. You have here your debit, your credit, and your balance. Okay, so we will just copy this format towards the different accounts. Sana sa totoong buhay ganito lang kabilis, no? But actually, if gumamit tayo ng pen and paper, ang hirap gumawa ng mga 3 money column ledgers natin. Okay? So we will just spend for cash. But ayaw niya maging straight. Ayan. Okay. So after making our 3 money column ledgers, we can now pause the transactions on the ledger. So remember guys, in preparing your 3 money column ledger, we have this ledger and actually we have here heading pa. On the heading, we have the name of the particular account. So we have here cash. And then on the right side, we place there the account number. So 101. Now, what we do is based on the different transactions, we record the items that affects cash. So first, on the journal entry, we look into our journal entry. In our journal entry, letter A, is there a cash? Yes. So we pause this one in your cash and owner's capital. So we remove it. Cash and owner's capital. So cash is 101 and owner's capital is 301. So you place here 101 and 301. So that it means that we already paused it. So we have here the transaction is investment by the owner. That is the date, let's say, is letter A, and we use general journal 1. So we have here a debit to cash amounting to 10,000. So our balance is 10,000. And then we also pause the investment of the owner to the owner's drawing, so owner's capital, that is on 301. So this is 301. And then we place your letter A. We have here your investment and a credit of 10,000. The reference is GJ1. The reference is GJ1, representing General Journal, page 1. And again, if ever you pause it, do not forget to place on the reference part of your journal entry the account number. We go now to transaction letter B. On your transaction letter B, we have here equipment, and we have here your notes payable. So under your equipment, that is chart of account number 157. And notes payable, that is chart of account number 200. So we find 157 and 200. So we have your equipment, that is 157. That is the transaction letter B, purchase of equipment. So we find it in your general journal 1, and then we debit the equipment at 5,000 pesos. Okay. Also, we have here notes payable. Notes payable 200 from transaction letter B. So we have here purchase of equipment. Reference GJ1, credit of 5,000. So balance is 5,000. We proceed to letter C. So under letter C, we have here a debit to cash and a credit to unearned service revenue. Cash is 101 and unearned service revenue is 209. So we go to 101 and 209. So that is letter C. This is a receipt of unearned revenue. It's still GJ1, 1,200. So our balance now is 11,200. Then we go to your unearned service revenue. That is number 209. So 209. So that is transaction C. That is your receipt of unearned revenue. Reference is General Journal number 1. Amount is 1,200. So the balance here is 1,200. Letter D, pays office rent for cash. So we have here your rent expense and cash. So we go to your rent expense. That is 729. That is for letter D. The amount is payment of rent. The amount is 900. GJ1. So the balance here is 900. Further, there will be a decrease of cash for the payment of rent. So we have here 900 GJ1. So this will give us 10.3 thousand. 10.3 thousand or 10,300. So again, letter D is posted on our salaries and wages expense. Posted on rent expense, that is 729, and cash on 101. Next, you have your prepaid insurance. We will post it to 130, and your cash we post it to 101 at 600. Okay, so we find again 101. So this is payment of prepaid insurance, GJ1. The amount is 600 pesos. 600 pesos. So this will give us 9,700. And then we have a prepaid insurance, letter E. What is the account number of prepaid insurance again? 130. So we have here payment of prepaid insurance, GJ1. So there is a debit of 600. So the balance is 600. We go now to letter E. So Pioneer, we're done with letter E. Letter F, Pioneer purchased a 3-month supply of materials on account. So we debit supplies 126. So purchase on account. So that is letter F. The amount of the purchase on account is equal to 2,500. Okay, and since it is purchase on account, we will credit accounts payable. We will credit accounts payable, and accounts payable is 201. Okay, so this is letter F, purchase of supplies. Okay, so GJ1, and then our credit is equal to 2,500. Okay, so we go back to our entries. So we said supplies, what is the account number? We already posted it, 126. Accounts payable, we already posted it, 201. Letter G, no entry. Letter H, withdraws 500 cash for personal use. So we debit, owner's drawing, we credit cash. So cash is 101 again. So this is letter H, withdrawal of the owner, GJ1, 500. So we have here 9.2 thousand. So 9,200. And then we have your owner's drawings, 306. So under your owner's drawing, again, we have your withdrawal amounting to 600 GJ1. So, I know it's only 500 pala. Okay? So this is only 500. 500. Okay. So that is letter H. Now letter I, owes employees salaries of 4,000 and paid them in cash. So salaries and wages expense, that is 726. Okay, so payment of salaries. Reference GG1. So we debit salaries expense of 4,000. Okay, so that's letter I. And since we paid it in cash, so our cash will also decrease. So payment of salaries. GG1 amounting to 4,000. So we have here 5,200 balance. 5,200 balance. So that is for letter I. So again, we debit your salaries and wages expense, that is 726. And then we have your credit to cash of 101. We go now to your last entry. We debit to cash and a credit to service revenue. So 101 and service revenue is 400. So 101, we have here revenue 10,000. So this will give us 15,200. GG1, letter J. And then we go to your service revenue. This is account number 400. So this is your revenue amounting to 10,000. Okay, so reference is GG1. After that, guys, since this is the running balance, it means we already have computed the balances. So we have here 15,200. So the balance here is 2,500, 600, 5,000 for equipment, 5,000 for notes payable, 2,500 for accounts payable, 1,200 for unearned service revenue, 10,000 for owner's capital, 500 for owner's drawings, and then 10,000 for service revenue, 4,000 for salaries and wages expense, and 900 for rent expense. So we can now prepare our ledger. Since we're done with our ledger, we can now prepare our unadjusted trial balance. Okay, so in your unadjusted trial balance, you have here your Pioneer Advertising Agency, then unadjusted trial balance. Let's say this is October 31. So we have here a debit and a credit. So guys, what you need to do is, again, list down all the accounts. You just list down all the accounts. And then after listing down all the accounts, the next thing that you need to do is to get their amounts and place them in their normal balance. So our accounts are, so we have here cash. We also have supplies. We have your prepaid insurance. We also have your equipment. We also have your notes payable, accounts payable, unearned service revenue, and then owner's capital, owner's drawings, then service revenue, you also have your salaries and wages expense, we saw last one, rent expense. Okay, so these are the different accounts that we have listed based on our transactions. And then we just get their balances. So we go now to our ledger. So cash has a balance of 15,200 and supplies has a balance of 2,500. So we place here Cash is an asset, so 15,200 on the debit. Supplies is an asset, so 2,500 on the debit. Next, prepaid insurance has a balance of 600 and equipment has a balance of 5,000. So prepaid insurance and equipment are both assets. Therefore, we place their balance on the debit. Next, we have your notes payable, accounts payable, amounting to 5,000 and 2,500 respectively. So notes payable and accounts payable are liabilities. Therefore, we place them on the credit. Next, we have your unearned service revenue of 12,000 and owner's capital of 10,000. Unearned service revenue is a liability. Therefore, we will place it on the credit. So amounting to 1,200 and for owner's capital amounting to 10,000. So why do we place on credit the owner's capital? Because owner's capital has the normal balance of credit. Next, owner's drawing. So owner's drawings of 500 is a contra equity account and the normal balance is debit. So we place here 500. Next, service revenue. We have here 10,000. Service revenue is the revenue account. Revenue account has a normal balance of credit. So 10,000. Salaries and wages is 4,000 and rent expense is 900. Both of them are expenses, so we place them on the debit. After that, we get the balance. So let's compute for the balance. This is 28,700. So let's check. Okay, also 28,700. So they are balanced. So again, guys, on the doctrine of equilibrium, both your debits and credits must equal. So here, when we prepared our unadjusted trial balance, both of our debits and credits are equal. So we go back on our preparation of your ledger. So if ever we are to prepare a 3-money column ledger, guys, if we prepare a 3-money column ledger, what do? We prepare your 3-money column ledger based on the accounts that we use. So based on your chart of accounts, the technique is just to check the account titles that you use. After checking the account titles that you use, you will make your ledger. So you just transfer the recording from the journal. So this is our journal. Sorry, I did not make a proper journal. However, just imagine that that is your journal. And then your journal will be transferred to your 3-money column ledgers. And then from your 3-money column ledgers, what did we do? We get the balances on each account. So remember, you need to know the rule of debit and credit. So does the debit increase or decrease the account? It depends on the normal balance of the account. So you already know what are the normal balances. After that, you can just easily get the balances using your 3-money column ledger. And then we transfer and list down all accounts in our ledger to the unadjusted trial balance. And then whatever balance you have computed under your ledgers will be placed on your unadjusted trial balance. And just we total your debit and credit. So if ever your debit and credit is equal, it means that you have an equilibrium as your journal entries. So you posted it properly and you computed the balance correctly. Okay, so that is the preparation of your unadjusted trial balance using your 3-money column ledger. Sir, how about the accounts? For the accounts, it would be easier for you because you just need to prepare letter T's. So we have here T account. So you have your different T accounts. One, okay. So ayan na yung mga T accounts natin. And then you just place here the different accounts again. We have your cash. We have your supplies. And then we have prepaid insurance. We also have your equipment. notes payable, accounts payable, unearned service revenue, owner's capital, owner's drawing, you have your service revenue, we have also salaries and wages, and last T account, we have your rent. Okay, so in your T account, what we do is we just transfer on the T account the amount. So we have your cash and owner's capital. So naka-debit yung cash, di ba? So ilagay natin yan dyan. Owner's capital naka-credit, ilagay mo naman siya sa credit ng owner's capital. Next, letter B, equipment and notes payable. So equipment of 5,000 naka-debit and notes payable naka-credit na 5,000. Okay. Next, cash of 1,200 naka-debit. Tapos unearned service revenue 1,200 naka-credit. So, ganun lang yung gagawin natin. Next, rent expense naka-debit 900. Tapos cash naka-credit 900. Next, prepaid insurance naka-debit 600. Cash naka-credit 600. So, bawasan naman natin yung cash ng 600. Okay? Next, supplies naka-debit at 2,500. Accounts payable naka-credit at 2,500. Age owner's drawing naka-debit 500. And then cash naka-credit at 500. Next, salaries expense of 4,000 naka-debit. Cash naka-credit at 4,000. Next, we have your cash and service revenue. Cash naka-debit at 10,000. And service revenue naka-credit at 10,000. Ayan. So, after natin i-prepare yung T accounts, kunin nyo lang yung balance niya. So, magkano yung balance ng cash natin uli? 15,200. Ito, 2,500 pa rin. Ito, 600. Ito, 5,000. Ito, 5,000. Accounts payable to 5. Unearned service revenue is 1,200. Owner's capital is 10,000. Owner's drawing is 500. Service revenue is 10,000. Salaries and wages is 4,000. And rent is 900. Okay, so we try to compare. We just copy this one. The balances that we have computed to our trial balance. So, i-check natin kung pareho siya. So, ito. Paste lang muna natin siya. Tapos, ilipat natin ito. Ayan. Okay. So, 15,200 ba yung cash? 15,200, 15,200. Supplies, 2,500 ba? 2,525. Prepaid insurance, 600, 600. Equipment, 5,000, 5,000. Notes payable, 5,000, 5,000. Accounts payable, 2,500, 2,500. Unearned service revenue, 1,212. And then we have your owner's capital of 10,000, 10,000. Owner's drawing of 500, 500. Service revenue of 10,000, 10,000. Salaries and wages, 4,000, 4,000. And then rent, 900, 900. So as you can see, whether we use your three money column or T account, we will still yield to the same amount under your unadjusted trial balance, or we will still yield to the same balance of your different accounts. Okay, guys, so again, whatever you use, whether it is your three money column, why is it three money column? So we have your debit, credit, and balance, or your T account, because it is likened to a big or capital letter T. Okay, and your last type or mode of your ledger in which we try to learn is your transaction analysis. So how does your transaction analysis work? So your transaction analysis work by listing down your different accounts. So we have here your transaction, and then we have your accounts. So we have here 12 accounts. So we will just list down 12. We will make 12 columns. So 1, sorry, 2, 3, 4. Okay. So 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay. So this is our transaction analysis, guys. We will just make columns. Okay, so we will just make columns, guys, based on the number of accounts that we use. So what are the accounts that we use? We have 101 for cash, and then we have 126 for supplies. And then we will just get for the different accounts and list them down again. So we have 130 prepaid insurance, and then 157 equipment. We have 200 notes payable, and then 201 accounts payable, and then we have 209 unearned service revenue. We have 301 owner's capital. So we just place this one as capital. And then we have 306 drawings. And then we have your 400 service revenue, 726 salaries and wages, and then we have 729 rent expense. Okay. So after listing down all of the accounts that we will use, then we can now start making our transaction analysis. So letter A. So Bird invests 10,000 cash in our company. So we debit cash and we credit our capital. So 10,000, 10,000. So based on our journal entry, you place them on the proper column. So we debit cash, so increase in cash, so positive. We credit capital, increase in capital, so positive. Letter B. Pioneer purchased office equipment costing 5,000 by signing a 3-month note. So equipment, positive. Notes payable credit, positive, 5,000. Letter C. Pioneer receives 1,200 cash advance from a client. So our entry is debit to unearned service revenue, debit to cash, credit to unearned service revenue. So since you debit cash, positive, you credit unearned service revenue is liability, positive. Letter D. Pioneer pays office rent in cash. So you debit rent expense, debit is positive. And then you credit cash, credit of cash is negative. So we place here negative 900. Letter E. Pioneer pays 600 for 1-year policy. So you debit prepaid insurance. Debiting prepaid insurance and asset is positive. Crediting cash is negative. So you deduct 600 to cash. Letter F. Pioneer purchases an estimated 3 months supply of advertising materials. So supplies, debit, 2,500, and a credit to accounts payable. If you credit your accounts payable, that is positive because normal balance of liability is credit. We proceed to letter H because letter G is non-accountable. So letter H. On October 20, Bird withdraws 500 cash. So you debit drawings. Drawings, debit. Normal balance of drawings is debit, therefore positive. And of course, you credit cash. If you credit cash, there will be a decrease in cash, 500. Next, salaries. So debit, salaries and wages expense. If you debit your salaries and wages expense, that will be positive, so 4,000. And then since you will credit cash, your cash will decrease by 4,000. Letter G, 10,000 in cash for services. So you debit cash, so increase in cash, and a credit to service revenue. Revenue, normal balance is credit, therefore you just increase it by 10,000. After that, guys, after making our transaction analysis, we can already compute for the amount of our ending balance. So what is the balance of cash? We have already computed that a while back. Kunin lang natin dito para hindi tayo mahirapan. 15,200. And then supplies is 2,500. Insurance is 600. Equipment is 5,000. Notes is 5,000. Accounts payable is 2,500. Unearned service revenue is 1,200. Capital is 10,000. Drawing is 500. Revenue is also 10,000. And then salaries and wages is 4,000. And then we have your rent of 900. Okay, so guys, we learned today 3 different ways on how to compute for the balances of each account. So you can use your 3-money column ledger, you can use your T account, and you can use your transaction analysis. Basta guys, if ever the problem tells you prepare a transaction analysis, you do it this way. So this is the transaction analysis. You prepare T accounts, then you do the T accounts. You prepare a ledger, you do the 3-money column ledger. Okay, so I hope we're clear as to how will we use these 3 different types of ledger. So anyway, whatever types of computing for the ending balance of each account, we will still yield to the same unadjusted trial balance. Okay, so whatever type of computing or whatever mode, whether it is 3-money column or ET account or a transaction analysis, we will still yield the same unadjusted trial balance. Okay, so we will still yield the same unadjusted trial balance.